Good morning, fellow option traders. This is Jeff, and welcome to the Daily Scan for Thursday, September 19th, 2013. Another busy day on the market affecting announcement front. We have jobless claims at 8:30, and then existing home sales and the Philly Fed survey at 10 a.m. Those could be biggies, although nothing quite as big as what happened yesterday with the Fed meeting and Uncle Ben. I guess the market's really more concerned about short term than it is about long term, because even though the Fed said that the economy's not growing, jobs aren't growing as quickly as what everybody seems to think they are, at least in the U.S. and I think probably worldwide, because I heard some things I think about Greece or some other country in Europe that is back in trouble again. So I guess the market's really only concerned about short term. And short term, because QE is going to continue here in the U.S., we're just going to print more money, $85 billion a month, and everything's going to be just fine, right? Right. All right, got a lot of things I wanted to get to today. So let's move right along over in Asia. Very nice day, very nice bullish day over there. Pretty strong. Europe looking also very strong here at midday overall. So we'll take a look at the U.S. Here we go. We're looking at a kind of a big open here for the indexes. And the one that I want to point out here is gold, up almost 5% overnight. And silver up almost 7% overnight. Those are biggies. And how are we doing with oil? Well, that's not good. That's definitely not good for oil. But you know, when things are looking good, even oil can go up because they anticipate demand's going to go up, so they raise the price. Yeah, I mean, you know, if you want it, you know what, you're going to have to pay more for it. All right, now yesterday I got alerts on Priceline, Amazon, and CF, and the only ones I took action on Amazon and Priceline. Amazon, my short's at 300 and the current price is 312. That's doing well. And Priceline, the short is at 965 and the price is at 995. So that one's doing well. Everything else is doing nicely also. And we got our gold covered call here, which was not looking real good. Was not looking real good yesterday. It looked like as though I may have to roll down, but now it's looking like as though I may not have to roll down. So if we take a look at gold, let's just do a quick chart here. Where is she at? There we go. I'll do this overnight chart. And you can see the big run up yesterday, and our current price is below the close yesterday, but it looks very strange if you were to, for instance, take a look at gold futures, and there is a bit of a correlation between the two here, between GLD and gold futures, but you can see that the big run up in gold, well, matched yesterday at 1530, at 330 yesterday. It ran up and it's been kind of just sitting there for right now. So it looks like as though this, if it's up 55, that means it was like 3, yeah, that's about right. There's a 55 run right there. 10, 20, 30, 40, 50. So that's where it's at. I don't know exactly what's going to happen to GLD today and tomorrow. Looks like it's down a tad here. Let's take a look at the Analyze tab on it, GLD. So it looks like as though we're going to be able to retain that entire premium if it stays above the short strike, which is at 134. Or it stays below the short strike, I'm sorry, at 134. So it's probably going to do that. However, should it get called out, I did a little calculation here. If it closes above 134 tomorrow, and we get to keep that entire premium, and then the stock gets called away. So I paid $131.97. It gets called away at 134. Plus I get to keep this $2.31 here. End up with a 3.3 rounded off gain on that, which is not too bad for a month. So if you're bullish on anything and you want to do sort of safe stuff, and you have the capital to do it, remember you have to buy these shares. Covered calls aren't too bad of a thing to do. I mean, you can make money off of them, and they do inject a little bit. It's like juicing your stock purchase by doing selling some calls at, of course, a higher price. And whether you're willing to give up on this or not is another thing. So the other part of it is, could we roll? Well, yeah, we could definitely roll. What if we roll to 131? So if we were to roll now, we'd have to cough up 55 cents and then collect 365, which means you collect about $3. Round it off if you were to roll this today. I would still roll it tomorrow because, and here's the reason, our extrinsic is still 52 cents here, and that's pretty much reflected here. If it's out of the money and there's any value left to it, it's all time value or extrinsic value, which is 52 here, and this is sort of a midpoint. Well, it's not sort of a midpoint, it is a midpoint. And that's how that calculation is done, and this also is a midpoint here. So that's where we would be with that if we were to roll that. So I still have an alert set up, a time alert set up in my email, or my email client, my calendar program, to have me on Friday take a look at this and see what we're going to be doing. Okay. Jumped in on Amazon yesterday, and here's where we're looking on that. As soon as we get a chart, thank you very much. Got in here around 10 o'clock or so yesterday, a little bit after 10 o'clock, and was able to take advantage of the Bernanke rally and also Priceline. Also taking advantage, got in here just a little bit before 10 o'clock, or just a hair after 10 o'clock. Also took advantage of the Bernanke rally. Alright, so let's see. Before we get into the scan, two more things I wanted to cover. The CBOE SPY versus SPX seminars that were started Tuesday night, and there was one last night, and I guess there's going to be one tonight. The one on Tuesday night, I watched it, and I was pretty disappointed. It definitely did not meet my expectations. I thought there was going to be a little bit more in-depth analysis, but all he did through half the program, after he talked a little bit about the differences, was talk about trades that you could do. And he was talking about credit spreads. and iron condors. Excuse me. And I think he was probably on Wednesday night and maybe tonight to go into other trades. I was sort of expecting a little bit of a discussion about really what is the difference in trading them, not what types of trades, what type of spreads you could do with them, because you could do that with SPY and SPX too. So a little bit disappointed on that, and he didn't really get into SPX PM and why they came out with that particular offering. So I didn't watch it last night. I was busy, and I probably will not be watching it tonight. The other thing I wanted to cover is I got a couple, occasionally I get emails about on my charts how to get that little arrow in there. And occasionally I talk about it in my videos. But I'm going to just direct you right over to a website here called alt-codes.net. And I'll put that in my comments. And here it gives you what each symbol is when you type it out. So for the up arrow and the down arrow, you press the Alt key, and then you go to your number pad. You need a number pad. If you have a laptop that doesn't have one, I'm not sure exactly if you can do this or not. So what you might have to do is, for instance, from this particular website, I don't know if you can just copy that and paste it into wherever you're using it. I'm not sure. I'm not going to bother with that. But if you have a numpad, which is the reason why I bought a laptop with a numpad, I paid a little bit extra, but it's such an incredibly handy thing. So I wanted to do that. So I think that you can use this tool over here, ASCII editor, simply generate ASCII art. Alright, so that's enough about that, and I think that covers everything that I wanted to cover, and now we're going to jump right over to the A+ list. And first up is Apple. Apple is looking like a very good overnight at the money credit spread. So I will be looking at that today. And I'm going to put an alert on it. I'm not going to do it unless it moves up. So I'm sure it's going to move up. Alright, so we have an alert on Apple right now. Let's take a look at what I am thinking. Alright, so this is what I'm thinking. Let's say that Apple stays right here, and I go ahead and do this short at 470. It doesn't have to move a whole heck of a lot to be able to collect the entire premium, only $1.70 overnight. So that would be very nice. I'd collect $330 in credit and risk $500. So in reality, it's only $170, right, that we have at risk because we're taking that credit. So that would be a sweet trade, and there may be other candidates like that. And I would not do an expiration for next Friday, especially on Apple. I'm not going to hold over the weekend any credit spreads. So all we're looking for right now are overnighters, and they have to be high volume. So that's the scan that we're doing for today. Who else is a high volume? Google's pretty high. Netflix. Okay. So also want to point out, I can talk about this maybe next week. I changed my columns here. I got implied volatility, and then I have the IV percentile. IV percentile is where it is in its IV range over the last year. So, for instance, Amazon is in the 15 percentile at 25 for IV. So that means that it's pretty low compared to its percentile over the last year. And that's across the board on all options, just a conglomerate base price. Google, you can see it's right in the middle. MasterCard is close to being in the middle. Netflix is very, very low. So if you're looking to trade high IV and you're expecting an IV explosion, Netflix is a good one to do that with, as an example. V is a good one to do that with. MasterCard would be a good one to do that with. So just as an example, if you want to trade IV. So the only other one I might want to take a look at is Netflix, and Netflix has been pretty hot. Where are we here with open interest? Only around 1,000. I would like to see, well, that's pretty high here. What else we got? Priceline? Priceline's pretty low. MasterCard. Very low. Alright, how about LinkedIn? Seems like everybody likes to trade LinkedIn. Yeah, okay, so LinkedIn and Netflix, right? Yeah. So let's look in Google. How's Google? Not as high as I would thought it would be. So those are the ones we're going to look at. We got LinkedIn and Netflix. Let's take a look at LinkedIn and see if we would want to do an overnighter on that. Not as powerful a day as some other ones. I don't like these big wicks up here. Means price moved up and pulled back. Looks like sellers are trying to take over on LinkedIn. The last one we're going to take a look at is Netflix. And how does Netflix look? Netflix looks very good for an overnighter, so that's another one. I'm going to put an alert on that. And that will effectively conclude our scan for today. So I'm only looking for overnighters. I don't want to hold into the weekend, so doing a regular scan, sensible thing to do would be to do expirations for next Friday, but it's too early in my book for that. I'm going to wait until either tomorrow or Monday, if I have time on Monday. It's going to be a very busy week next week. All right, enough rambling. That's it for today. Oh, wait a minute. I want to take a look at Netflix is at 297, 320. Let's say we did one. I think it's going to pop above 310. So right now we'd be at 284. So that's almost a 1-to-1 risk reward. And that would probably be a pretty good one. 284. I'm sorry. 310 for that short. It would be up here. That would be a pretty easy move for Netflix today and tomorrow. So we'll take a look at these and see what we end up with. All right, that's it for today. Have a great day. Thanks for watching and happy trading.